If you work from home, you may be entitled to claim a tax deduction. As always, you're going to want to maximize this claim. And this is an area where we have two different methods to pick from, and it's important that you pick the one that's going to maximize that deduction. I'm going to go through these two methods, explain how they work, and how you can know which one works best for you. So let's first look at the fixed rate method. And this is the simplest of the method because we're simply going to claim our number of hours worked from home by the fixed rate. Now this fixed rate has actually increased up to 70 cents per hour. So we're simply going to take hours, maybe we've got 1,000 hours, and we claim by the 70 cents, it's going to give us a claim of $700. Now we need to understand what this claim includes and doesn't include so we can compare that with the actual cost method that we'll get to later. So the fixed rate includes home and mobile internet and data expenses, mobile and home phone usage expenses, electricity and gas and energy expenses, stationery and computer consumables such as printer ink and paper. So you can't claim any of these items separately if you're using the fixed rate method. However, you can still claim things like depreciation on, say, a laptop that you're using from home or your home office furniture. So those are in addition to the fixed rate, but those other items I said are inclusive in the fixed rate you can't claim separately. Now, the thing with the fixed rate method is the ATO now wants you to track all of the hours. You can't just say, I work 5 hours on average from home a week. They want to see how many total hours you work. So they want to see time sheets so you can show how many actual hours you work from home, because without the hours, you can't calculate the method. Now, before I talk about the actual cost method, something else you can do to help maximize your return is to subscribe to my free email newsletter. I send out a newsletter every single week, all throughout the year, helping you better understand taxes and giving you some tricks and tips that I've learned along the way. I'd love to see you there. But for now, let's get back into the video. So the second method is the actual cost method. And this is where we're claiming the actual work-related costs for you working from home. What we're going to do though is apportion these between private and work-related. So we're going to go through all those items that we had in the fixed rate method, but now we're going to claim what actually was spent. So we're going to look at our phone, our internet, and our electricity and gas, and then obviously any stationery and consumables. Now we'll start with the stationery and consumables. They're easiest. We just go, how much did we actually spend on these? How much did we spend on diaries or pens and paper? Easy, we do that. However, those other methods are a little bit difficult for phone and internet, for instance. We now need to work out what is the work-related percentage and what is the private percentage, and then we only claim that. So if you're spending $100 a month on your phone, you might determine it is only 50% deductible. So therefore, you're only going to claim $50 a month or $600 in total. You would do the same for the internet. So this is going to get you your claim. Now, electricity and gas is the hardest of these. If you look through the ATO method here, it's quite complex. They list it step by step of what you need to calculate. And it's all going to be about the running costs of your electricity and how much energy the items that you're using use. So you can go through, do that calculation and add that in. What you do then is you look at these total costs versus what you would have got under the fixed rate method. And now you can determine which method works best for you. Now, with the actual cost, it's the same as the fixed rate where we can still claim our depreciation or our office expenses such as our computers and keyboards, etc. Again, you need to keep receipts for all of these things so you have the proof of purchase. And of course, if there's a private usage portion to any of these, you need to deduct for that as well. Now, I did say at the start of the video, I'll talk about which one works best. It is going to depend on your situation. It's going to depend on how many hours you're working from home and what your actual running costs are. What I find in a lot of cases, the fixed rate method is pretty good. A lot of people go, this is the easiest method. I don't have to worry about too much. I know if I get an audit done, all I need to do is provide my hours as my proof, and that's it. It's very stress-free because it's very simple. The actual cost can quite often give you a higher claim, but how much higher claim will depend on your situation. What you want to do is weigh it up and go, how much effort is that? What's the claim going to be? How does that compare to fixed rate? For instance, if we did that situation before where we did the 1,000 hours and it come to a $700 claim under fixed cost, but then we did that with the actual cost and it was only $720, we might go, you know what, it's not worth it. We're not going to spend the time doing that next year. We're just going to track the hours. But if that claim was $1,000, $1,400, we might go, yes, definitely worth our time tracking that method. What my overall suggestion would be is keep track of both of them to start with, because this gives you the option to pick the best method. Now, after year one, you might determine that it's not even close. You definitely should go with one of the methods and you'll just do that. But at least if you've got both, you can compare. If you're wanting advice on other areas of your tax return, my how to maximize your tax return video is always a great starting point because it covers a bit of everything and I really enjoy making it every year. I think it's packed for value. I'd love to see you over there and I thank you for watching this one.